Well, the market finished this week down. The S&P finished almost down 2% for the week, and the NASDAQ finished down about 1.5%. 1% of that, so two-thirds of that came today. And guys, guess what? The talk is tariffs quite yet again, with our president threatening Apple with a 25% tariff on iPhones sold but not made in the US. Guys, we're back on the tariff game. So the question becomes, what does this even matter? I mean, guys, again, we talk about this over and over. If you're new to the channel, I'm not this person who believes that all these stories that are going on, these little stories here and there, add up to big things for the long run. I might sit there and say, this guy's crazy. These are tariffs. These are going to affect things in the long run. I don't think so. It's a temporary thing. It is a lot of coddling. It's a lot of storytelling by our president, who I voted for, but it's a lot of story by our president saying that we don't have jobs because other countries take advantage of us and we're going to impose tariffs on them for that reason. I don't believe that. You might not agree with me. I believe that the world economy is getting bigger and better, and that helps the US economy. But as the US economy gets richer and richer, as you make more money, we cannot afford to build things in the United States of America as cheaply, as inexpensively as other countries. That's a fact. That's okay. Now, I like Warren Buffett's idea of basically saying, okay, if people export, they have an automatic, they get an automatic license that allows them to sell it to somebody else who can import, et cetera, et cetera. I get it. It's a great idea. Let's not sit there and think that just because we're not able to do certain things, that means that everybody else is going to kill us. No, they're not going to kill us financially. If we can't build products that are cheap, okay, we can buy them because they're cheap. Would you rather be able to do one or the other? I'm not sitting here trying to convince everybody out there that they need to be rah, rah, rah US or rah, rah, rah international. I'm just trying to sit there and think economically and intelligently and realize that we're just trying to make more money as a society. When we make more money as a country and a society, everybody makes more money. These blips on the radar are part of the blips on the radar we see all the time. You go back the last 70 years in the stock market, how many bad things have happened? Thousands, tens of thousands, probably millions of things have happened, varying levels. Just because something makes the news does not make it a big item. Let's not forget that. Let's not make everything in this world be about us versus them versus us, and this news means that everything is awful. Some things are bad, but the ironic part about everything is the one reliable metric, valuations, that tell us about the future of stocks is the one thing people ignore. Valuations are still well over 100% overvalued in history on the two most reliable metrics, the stock market to GDP ratio, also known as the Buffett indicator, and the 10-year cyclically adjusted PE ratio. Everybody's worried about everything else in this world, and they're not worried about the thing that actually matters, that the more you pay for a stream of cash flow, the less return you're going to make. So we sit there and worry about all these other things, and we're not worried. You know, it's like, let's look at a relationship. It's kind of like a relationship in which a guy cheats on his wife like crazy over and over and over again. And he's sitting there saying, well, that's not the reason why I'm worried about my marriage. It's more because, and say, she doesn't sit there and fold my clothes the right way. Obviously, I'm exaggerating, but the point is, no, this is the real problem with relationship. Your incessant cheating. The real problem with the markets is valuation. That's what really bothers me about the markets. Valuations are awful. Have I been saying this for a while? Yes. And valuations keep getting worse. I get it. Sounds like a broken record. I don't know when valuations are going to come back down, but they will come back down. I don't know when valuations are going to matter completely, but they will matter at some point. The same thing that drove markets up was everybody's putting money in low-cost ETFs. That will shift eventually. With that said, do I believe that valuations today can justify a higher level than 100 years ago? Sure. We had to spend a lot of money to build a factory 100 years ago. Now we can have 20-person companies generating tens of millions of dollars in revenue and cash flow. All right, so it makes sense that we should have a higher valuation on companies that can do that because it takes less capital to sit there and generate more and more profit. I can get behind that. But isn't it ironic that our profit margins aren't that much higher? Yes, they're higher now than historical. But look at the internet. Look at 25 years ago. A lot of you probably weren't around 25 years ago. Some of you were. 25 years ago, the internet was changing the world. Spoiler alert, it absolutely changed the world. Absolutely, the internet absolutely changed the world, just like computers did, just like, and guess how many companies still went under? We still had a crash because of the dot-com crash. We cannot forget that valuations matter. At some point, valuations will matter. And guess what? There will be a time on this channel when I'm saying stocks are undervalued, keep buying. It's going to get better in the long run. And people are going to say, Paul, you've been saying things have been undervalued for a long time now. When are they going to? I don't know. I don't know when they're going to stop. I don't know when stocks are going to fall. I don't know when they're going to go back up. All I know is if they're overvalued, be cautious, still dollar cost average. If they're undervalued, still keep on buying. And if they're overvalued, it's not saying to stop. Like I said, it's to continue on your dollar cost averaging, but be ready for a wild ride. But take that advantage going into it. All of the things on this channel, all the things on this website, this is Yahoo Finance. We have our website where we do all these stories. These are all stories trying to tell you why things should matter. Okay. Some of these matter. Some of these don't. Can I ask you a question? 3 years ago, it mattered. 2 years ago, it mattered. 1 year ago, it mattered. 5 years ago, we were dealing with a global shutdown that was going to shut down the entire economy, and stocks fell 40% in 1 month. And guess what? Right when the shutdown occurred, stocks bottomed. So you'd have thought that stocks would bottom during the shutdown or at the end of it. It was literally at the start of the shutdown. Isn't that interesting? Remember, these are all just storylines along the way, and news follows the stock price. But an astute investor like you who's watching this channel needs to remember that. It needs to remember these things, because when things aren't rosy, you have to remember that things aren't great forever and things aren't bad forever. Things will get better. Thank you for your time.